Hi, I am Jeffrey Wernick, and welcome to another pod shoot. Today we'll be actually talking about my favorite topic, which is Bitcoin. So I can't imagine a better topic. It certainly to me is a much better and more interesting, more constructive and productive topic than politics and the election and and all those other issues and current events. Um, I'm happy to have today Eric Yakes and Korok Ray. Eric is and he can talk more about himself, but Eric authored a book, The Seventh Property, Bitcoin and the Monetary Revolution, something I read when it was published. I found it to be a good read, and I noticed that it is very well recommended on Amazon, and the reviews have been quite good on the book. Um, Korok teaches at I think Texas A&M, and he, like me, is an alumnus of the University of Chicago, and and he teaches a workshop in excuse me, in Bitcoin, not crypto, not shit coins, but I think the thing that makes me happy about the two guests I have on today is that they do understand the difference between a shit coin and Bitcoin, and they do understand the difference between talking about crypto and talking about Bitcoin. So, and they know how not to conflate these issues, and they understand the differences in both the utility and the attributes of Bitcoin. This is a whole proliferation of a universe of shitcoins. So I think I don't know how many courses there are, like Korok is offering at Texas A&M, that are Bitcoin only courses. I think most of the courses that I've seen at the university level that have been proliferated, are blockchain and shitcoin courses. They're not really Bitcoin courses. So I think Korok is probably unique in the fact is that he has a Bitcoin only course and workshop, and has invited a lot of very good speakers, in addition to his own content, of some of the best minds in Bitcoin he's had into his workshop, and to giving his students, an exposure to what makes Bitcoin so unique. So first, I'd like to ask each one of you, um, when did you, what was your first exposure to Bitcoin, and what piqued your interest? So Eric, Korok, whoever wants to go first.
Oh yeah, I can jump in. I first discovered Bitcoin when I was in college, and my fraternity wanted to get fake IDs from China. That was the first time that we discovered it, and I didn't think much about it. The first time I took a serious look at it was my junior year of college, and my professor assigned us, a short essay covering Bitcoin. I took the financial education I'd been given at the time, and I applied it, and I concluded it was a speculative investment. It didn't have fundamental value. And that is what I held in my head for a few years until somebody pushed me to look into it more. And I think the primary reason is that I was approaching it from the perspective of it was a blockchain technology. And I would say, okay, well, if I need to assess the value of this technology, how does it produce cash flow? It doesn't produce cash flow. I don't have any model to assess what the future potential value of this could be. Therefore, maybe it's worth a lot. I just have no way of measuring it. Mm-hmm. And I always held that perspective until the first time I came across the idea. And I think it was actually just like a Reddit post at some point that Bitcoin is an alternative to central banking. That was a problem that I was acutely aware of. That's what I thought. Everything that was wrong in financial markets today stems from the centralized manipulation of capital. And that was something that kind of sent me down the rabbit hole, and that got me a lot more interested. But it wasn't that clear. To your point about crypto earlier, I spent a lot of time learning about other cryptocurrency technologies. Once I learned about Bitcoin, then all these narratives existed that, Ethereum does more things, or some of these other chains, and it's faster. And it took me, I was led into this spider web of knowledge where I had to explore those other things before I finally came back and said, no, Bitcoin has these unique properties that really aren't replicable at this point in time. And how the system is going to build is going to be much more similar to how the internet was built and how the financial system was built. And it's intuitive to think that a technology that's covering those two areas of a Venn diagram is also going to be built in a similar fashion through just layered of technologies and protocols that are optimizing for different functions around it. That's a much more complex thing to think through than, another blockchain that's faster and does more things. But that's something that, I spend a lot of time looking at today. After I wrote the book, I spent a lot of time advising in the industry. And now I'm raising a venture fund that is, looking at all these different types of technologies that can help increase adoption of Bitcoin throughout the world. And I was just watching Korok's talk at the Bitcoin for Corporations, and he was talking about some technologies that, I myself am really excited about. And I'll toss it to Korok.
Great. Thank you. Jeff, Eric, great to see both of you. So my story began during the financial crisis. At the time, I was in the Bush administration. I took leave from my faculty position at the University of Chicago, and I was in the belly of the beast from 2007 to 2009.
At that point, sorry to interrupt you. At that time, you were working for Eddie Lazier, right?
Eddie Lazier, that's right, who was my dissertation advisor at Stanford, yes. Right? A true Chicago economist. Also became President Bush's economic advisor. And those were some trying times. I could tell you all about that separately. We fought hard to limit the bank bailouts. We were winning in the beginning, lost that towards the end. Once I left the administration, obviously I had some bailout PTSD that I needed to recover from. So essentially the group of essentially libertarian-minded economists and lawyers had a monthly get-together, and we would get drinks in DuPont Circle. And in 2011 is when we talked about Bitcoin, which that was the first time I had heard about it. I read the white paper, actually. And I started doing some research about it. I didn't buy any, which I did, of course, but mostly was just curious about it from the academic angle. The white paper is very much like an academic paper, and so it was immediately familiar to me. And I, what I did was I looked up Nick Szabo, who at the time was one of the cypherpunks who created BitGold. He was actually he had an email address at George Washington University, where I was later teaching. And so I went to the campus, tried to look for him. Of course, he wasn't there, but he still he had some affiliation there. And then I put it on the shelf for a few years, and it wasn't until I came back to Texas where I reconnected with the Bitcoin community. So that was 2015. And 2017, 2018 was when I really started getting into it. What turned it for me was the book Programming Bitcoin by Jimmy Song. And for me, that was very important because it kind of let me look under the hood and adopt the Bitcoin ethos of don't trust but verify, to really understand what this was. And that was my aha moment. And once I saw that it really was this unification of disciplinary knowledge that uses technology to capture some of the highest and most cherished principles of freedom and liberty, I thought this was amazing. And it's something that the students and faculty need to learn about. So I hosted a Bitcoin conference, A&M Bitcoin conference in 2020, also in 2021, which was great. We got a lot of visibility. It was still fighting an uphill battle with the university because the universities, and I can, again, talk at length about this, are fundamentally hostile to many of the ideas in Bitcoin. And so I decided, well, let me try to reach the students. And that's when I launched the first Bitcoin class at Texas A&M. And I think really the first Bitcoin class in the US, only on Bitcoin. It was called the Bitcoin Protocol. I used Jimmy Song's book as the textbook. And I kind of supplemented with some economics and finance. Then I developed a secondary class in the business school. It's kind of like a no-code version of that class for business students because I want to have bigger reach. And Eric was kind enough to come speak in that class. And then finally, what I'm doing now is I am doing a few different things. I'm trying to understand the future of Bitcoin through artificial intelligence. That's my main project. Also working on, I have a book manuscript on banking in Bitcoin. I can talk about that. And the third is developing more Bitcoin curriculum online.
Oh, that's very exciting. I always like anybody who's trying to put effort into advancing Bitcoin education. And and again separating out the distancing Bitcoin from the proliferation of shitcoins. And I remember, when I myself used to give talks on Bitcoin, which I stopped doing quite a few years ago, because I was mostly running across shitcoiners, and I lost interest. But there used to be the saying when I used to speak at conferences that there was one that Bitcoin was blockchain 1.0, and Ethereum was blockchain 2.0, and what was the other project that was then considered blockchain 3.0? And so when it was all supposed to be about faster chains, and even in many of these groups, when people would ask Vitalik, the founder of Ethereum, who's a super smart guy, what utility you'd find in Ethereum and in smart contracts, he was not sure really what activity would occur on blockchains, because blockchain is essentially just a clunky database. So there's a reason why Satoshi adopted blockchain, as it was necessary for having a completely decentralized protocol. And maybe either Eric or Korok can explain to people why that's the case. But essentially, Satoshi didn't start off with the objective function of saying, there's this blockchain out there, let me find something for blockchain to do, like other projects, which basically said there's a blockchain out there and I could go raise money without having to go to the SEC and ask for authorization if I use this word blockchain, which is the derivation of the whole shitcoin universe of people just looking to raise money by claiming that it's a blockchain project and it's decentralized. And because of that, they can get money without going to the SEC and consider the token a utility token, when the only utility in the token is that it's a speculative instrument, because almost none of these chains have any real economic activity on them. So why don't you talk about when you read the white paper, what you said, what was unique and interesting to you as you read the white paper that provoked further interest in your part?
Yeah, so I think for me it was the first. I mean, at a base level, it was like the first real technology that because I have an academic bias, and so I like research papers. That's kind of what I do anyway for fun. And the fact that Satoshi laid this out in a white paper made it gave it some instant credibility. I also very much believe that the principles of Bitcoin, to me, are the most important part of it. Which is the name of my website, and it's also what I teach in class. And the white paper is very clear that there are some guiding principles behind this technology. It's not just some random iteration of some web application or some dating app or food delivery service that some 20-year-old Kate came up with. It has some real fundamental technology.
And what are those guiding principles?
Yeah, I would say probably number one. I mean, this is a common knowledge among Bitcoiners, by decentralization, the distributed network that powers Bitcoin. The second is the underlying cryptography and the belief in security and privacy. And then the third is this notion of consensus, which is really an innovation in social computing, and it's a new way of thinking about computer science in terms of an emergent property. And I think those are all
proof of work consensus.
Proof of work consensus, exactly right. And,
as opposed to proof of stake.
Yes, that's right. Yeah, and I think there's, I mean, there are many other, I think other versions of principles you could talk about, like self-sovereignty and individual and freedom. These are somewhat abstract concepts, but they are fundamentally embedded inside of the code. The way that the individual nodes on the network all need to verify each of the transactions, and they're all verifying the signatures. And so these are principles that Satoshi adopted in order to embed inside of the actual code base. And again, we talk about that in my class, that this is, it's different, I think, than how a lot of software is designed traditionally and still today, which is a little bit more, let's just throw stuff on the wall and see what sticks.
I think, I would add a couple of things to that, which you said, like it's censorship resistant.
Right.
Its monetary policy is immutable.
Yep.
And it's permissionless.
Yeah. Yeah. And you know, it's funny, the monetary policy and the scarcity of Bitcoin may be its highest and most enduring feature over time. It's kind of interesting that was not really a core part of the white paper. You know, so, you know, it could be that maybe Satoshi, him or herself or themselves, did not even know what the most enduring feature of Bitcoin will be. But it certainly is, in my mind, the scarcity is where it all is.
Well, I think to the extent that they mapped out the limit and the halvings, and they certainly understood the concept of its scarcity value.
Yeah.
And not only preserving the scarcity value and the immutability, but also how to have a reinforced security as there was more value on the platform, that the incentives would be to keep it more secure, the ledger.
Right.
So there was certainly a deep understanding of that. I think that's something I also insist upon, which is, you know, from my reading of the white paper, is that in the design, Satoshi gave careful consideration how to be anti-fragile with respect to government. So there was a lot of consideration on figuring out what kind of attack vectors the government could implement to shut Bitcoin down, and that was something that was, in my opinion, thought through in its design. Would you agree with that observation?
Yeah. Yes. I mean, for me, I think that that was a big difference from how you know, I saw the world through the lens of the White House in 2007, 2008, which was essentially a system of political capture. The reality is that, you know, when you have humans running an organization, whether it's the Federal Reserve or the Treasury, you have just a handful of people with extreme concentration of power, making decisions that have massive implications, probably untold and unintended implications on the world economy that they cannot fathom. And it's a failed system by design. And it's, you know, we knew that when we were there. And I think what Bitcoin does is just the distributed nature of the protocol and the network makes it fundamentally a completely different mental model. And that's a huge innovation and a huge radical shift from how we structure society today.
Go ahead.
Yeah, one thing I'll add too is on the point about it being a fundamental, you know, focus in the initial design. What's interesting is that it had to be a focus based on testing this, you know, protocol when it wasn't even at scale, and the systemic consequences of it were they weren't known ex ante, and we only know them ex post. And that was one of the most interesting things about Bitcoin, is that a lot of people don't have the context that a form of online e-cash, a digital form of money, was the product of about 40 years of failed attempts at creating it. Bitcoin was the first one that worked, because you can't just test the money on the world. You only can really test it. You have to see if it's actually going to get traction. It's going to expand systemically. If there's no misalignment of incentives that will ultimately lead to the detriment of the network. And that, I think, has been, from a focus of the community culturally within Bitcoin, arguably the most important factor to its success over time, has been that we want to maintain that decentralization and that permissionlessness of the network, which is something that can be lost. During the block size war period, where people were arguing for a protocol change, and they wanted to say, well, look at all these other cryptocurrencies, and they're doing things faster and they have more functionality than Bitcoin. What if we increase the block size so that the Bitcoin network could be faster? Would that be good? And what was so interesting is that the arguments by the community that were the primary argument that was supported by the community in this environment was the second order effects of increasing transaction throughput. And that is that the infrastructure is going to start to accumulate more memory as more transactions start to occur on this network because of an increased block size. The exponential effect of hardware storage for full nodes is going to get increasingly larger through running a node. And what does that mean? It means that the hardware costs are going to go up. And what does that mean? It means that the network is going to start to centralize to a degree. We don't know what the effects of that would be on Bitcoin over time, but what we can see is that cryptocurrencies who've made similar decisions get more centralized networks over time. They don't know where they're going to be in a decade, but I'm much more confident that Bitcoin is going to continue to be decentralized over time because of these community-based decisions of, not increasing the hardware costs of supporting this network and allowing anybody to be able to participate in it from a relatively cheap economic standpoint. And that is a very thoughtful way of approaching this type of network, as opposed to the broader crypto ecosystem, which is VC backed. And it's like, hey, we need to do more things, move fast, break things. Let's issue tokens. Fundamentally different approach to what we're trying to accomplish with Bitcoin.
I think also is what I've described frequently is that since I do think almost all these shit coins are securities. I think in the Trump administration, I think it was Clayton that put out a piece on how they defined how at that point in time the SEC defined a utility token, and so the first attribute was you don't use it as a tool of raising money. So if you're issuing a token to raise money to build something, that's not a utility token. And almost all these projects, they use the token to raise money. That's why the VCs are in there investing in this crap. The second is, by design, they have to be designed to either be stable or marginally depreciate in value, not appreciate in value. And their principal utility is to be used as a currency inside the network. That's what people spend, inside the network. And their principal utility is not supposed to be, as a speculative value, because there's not supposed to be any real value in the speculation of the token price itself. So it violates all those principles. So how can you have a permissionless system if ultimately your initial sin is you designed a platform that really requires permission from the government to continue to exist? So it can't be decentralized and it can't be permissionless, because there's an authority that can remove its permission to ever being continued to operate if you don't comply with its rules and regulations. And with Bitcoin, I think the frustration for many people in government is it cannot intimidate Bitcoin. It is truly decentralized, and there is no VC round where people got pre-minted, pre-mined tokens allocated to them, in return. So the white paper was in the public domain before the first the Genesis block. So there was an opportunity for other people to mine Bitcoin before Satoshi did. So whether they took advantage of it or not, it's a different issue. But there was no privileged access. There was no privileged advantage. And Satoshi had no control rights over anything, because the paper's in the public domain. So it's open source. So Satoshi can't change the rules, and Satoshi got access to mining tokens like anyone else could have, and could have done it before Satoshi did. So I think it's very, very different in the fact that that the government can come in and define any one of those other tokens as a security token, and therefore get control over the ledger. So, and then that ledger will never even be either anonymous or pseudonymous, because the government will just say, I want to know the identity of everybody on that ledger, and then that ledger becomes, not only is it centralized, it becomes an extension of the surveillance state. I don't know if both of you are in agreement. If you have any disagreement with my comment or observation, I'd like to hear it.
I've got some thoughts, but I'll let Korok say his piece first.
Yeah. So this thanks, Eric. This issue of centralization that both of you are talking about. What I would argue is, I think most people, it's kind of like free speech. Like they agree with decentralization as at first order, but they're not always willing to take it to its full extent. Let me use academic economists as an example. Most economists believe in markets, and they believe that markets are good for creating wealth and prosperity. But if you push them hard, they also say, well, they actually believe in the central bank, that there should be and needs to be a central bank that acts as a lender of last resort and can have discretionary control over the money supply. And I think that is going to be, in the long term, the biggest contribution of Bitcoin, is to move us away from that idea that we actually need to have a council of people who are deciding on the money supply for the world, and that maybe it's better to actually have a predictable and unchangeable schedule that everybody knows in advance. This idea, it may seem radical in Bitcoin, but it has roots in the Chicago School of Economics. So Edward Prescott won the 2004 Nobel Prize for this idea that you should not have, there are problems with having discretionary policies for money supply. And it's an argument for rules rather than discretion. And Bitcoin is the best embodiment of that idea, because the money supply schedule is embedded in the code, it's observable to everybody, and it cannot be changed. Yeah.
Yeah, because I think that's the primary point, is that it's observable to everybody. And the fact that we can know the scarcity of a monetary good into the future, that's the first time that's ever existed in the world. Right. We don't have that with anything else. The supply is variable for any other commodity that exists. So, I'm going to have a rudimentary way of probably explaining this to what Korok would understand, but the potential for market shocks from any sort of monetary perspective is effectively eliminated, at least when it comes to a commodity-based monetary good. Any other shock would really emerge from a monetary standpoint, from like a credit perspective, if that makes sense, Korok.
Mm-hmm. Yeah,
and that's really novel, and because Korok was giving a talk at Bitcoin for Corporations, and he was talking about a free banking type system. This is something I've written extensively on as well. Right. And this was a vision that Hal Finney had for the network as well. And that's, I guess, the idea of free banking, that we can have private market issuance of some sort of note-based system, or just private issuance of a monetary good. It's a truly free market-based system of what money will we use, and that's naturally converged upon by the public. It's the most free view that we could have of any sort of monetary function. I think that within the world of cryptocurrency and Bitcoin, kind of drawing it back to Jeff's points, these are kind of the two different visions of the world. And I think it tends to be a much more technologist perspective, that we need to have these perfect technologies for trustless scaling of Bitcoin over time. And while that sounds great, I think it could be potentially a utopian vision, because as the world exists today, there's fundamental trade-offs with scaling Bitcoin in every direction. And I think that, based on these trade-offs between efficiency and permissionless assurances that we're going to have some degree of trust that exists in certain forms. And then there's kind of this vision of, okay, well, if we use something like eCash mints as a banking technology to scale it, and then we had clearinghouse settlement between something like the Lightning Network, that's effectively recreating a banking system, but it's much more efficient than it's ever been. And rather than letting, using these perfect technologies that are going to be very expensive, or centralizing forces naturally anyways, we just cut to the chase and we build out a free banking system on top of this. But with these new technologies that we have, it's going to be vastly more competitive than it's ever been in history. It's going to be more informationally transparent while still maintaining individual privacy. It's going to have all these fundamental factors where competition can solve these problems that we're trying to solve with technological solutions. For, maybe it's a Pareto rule of the time. Maybe it's much more. And that's one vision of the world. And then in the more cryptocurrency based vision of the world, some of that's coming to Bitcoin as well. And I think for my firm, we want to be as pragmatic and unbiased with the alignment of Bitcoin success in the long run about all of this in the future. So we do have a social view, not just an economic view on how we understand some of these other technologies. I think from the token standpoint, there's competing blockchains, all these things. We don't view that. We think that there's going to be convergence upon one valuable form of collateral that everything moves upon. That's evidently Bitcoin at this point. But in terms of like, what's the value proposition of a token? A token is just a cryptographic signature. It's just, how is that cryptographic signature being used? And we think that there's how it exists today is being used in ways that are either, fraudulent or misleading. They might have good intentions, but they misunderstand what they're actually using this for. And it's, and in most of the cases, it's, well, why wouldn't you just use Bitcoin instead of this actual token? And then for the utility tokens, the alignment of the purported utility that we can observe in the market today with the actual use cases is diverging very significantly. And we don't know if there's that much credence to that form of functionality. And then in particular as well, just to own these things in the first place, the valuations are drastically, the valuations aren't aligned with what we think any sort of fundamental value could ever accrete to these. And it's just based on speculation today. But the idea that, securities issuance and, financial contracts, any contract of some form, whether those be financial contracts, can move over a more efficient medium, yeah, that's a great idea, but it requires backing by a legal system. And it requires all of these other variables to fall into place before we could legitimately have a scaled form of tokens representing securities or whatever form of financial contract you want to call them. And I think that that's decades away still. So a lot of what exists. Yeah, go ahead.
I'm skeptical on the utility of smart contracts. I mean, if I go and tell people I'm a bank, okay, here's your smart contract that I'm lending you money against your house, okay? And the smart contract stipulates the first time you're 1 day late in your payment, you're going to be automatically foreclosed. And here's another smart contract that says, here's a written document, you have your payment schedule, but if you default on a payment, you can come and have a conversation with me, and you're likely not to lose your house. So which contract do you think the consumer is going to choose? The one that says there's a nuclear option, and of course you can always make a smart contract a little bit smarter. You can say, well, the first time there's a defaulted payment, it could trigger some penalty. The second time there's another penalty, the third time or a certain amount of days, and then that triggers. So you can make the smart contract a little smarter, but ultimately people will choose that when shit happens, when unexpected event happens, they want to be able to talk to somebody and negotiate, and they want to use the document as a framework for having a negotiation, not for triggering a nuclear option. So the smart contracts basically will end up defaulting sooner rather than later to a nuclear option that people are not going to prefer to the ability to sit down with somebody and have a conversation and say, this is what's happened in my life. There's a recession. I lost my job. Give me a little bit of forbearance and stuff like that. So it's not going to dominate. Then you have other types of contracts that you see in the banking system that have all these covenants. Then the question is how do you monitor all these covenants, and what happens when there's a breach of a covenant? Do you trigger a nuclear option when there's a breach of covenant? Or then you might have some contract that says that I will pay you based upon advances in that you can demonstrate in the project. So how do you demonstrate these advances? And the question is do you always agree on that number that a third party comes in, and do you want to negotiate that? On the most part, when people negotiate contracts, they know all contracts are incomplete. They're all incomplete. So given the fact that all contracts are incomplete, given the fact that you cannot plan through every scenario that's likely to happen, and know whether that scenario is an isolated scenario, or somewhat systemic in nature. And that question is what does that trigger? Does it trigger a default option, which is like a nuclear option and that blows everything up? Or does it trigger a conversation? And most people will choose to trigger a conversation. So the smart contracts are suboptimal contracts. There's nothing stopping many people from adopting smart contracts today. They're not, because they don't find the utility in them as compared to being able to have a negotiation with people when unexpected stuff happens. And that's why you want to be able to negotiate, because unexpected stuff is going to always happen. And the question is, what's triggered when unexpected stuff is going to happen? So that's why there's no economic activity really on blockchains is because the smart contracts are actually stupid contracts. So, and that's what they should be called, stupid contracts, because they're very inflexible. So they're not that smart. They have no AGI, okay? So,
So Jeff, I think at a first order, your characterization is definitely right for the world as we know it today. But I do think in the future, when more and more activity is mediated through machines, I can see a use case for a smaller scope of a smart contract where machines to machines are transacting or negotiating, and the more and more of our economic activity has shifted online. And it'll never be perfectly complete. It'll always have, but it'll have, these could be very micro transactions, very small transactions, machine to machine, where I could see some value for a more complex contract between agents. And I would like, I talked about this in my lecture at MicroStrategy. I would like to see that happen on Bitcoin rather than on these other chains. And I personally, I think it's not obvious that it's going to happen on Bitcoin. So I do think the community needs to move behind this and try to make it happen. But we'll see. We'll see how that goes.
I think, go ahead, Eric.
So I think an example of how this can work today, to precisely your point, if we think about a traditional, arbitrated or mediated type of scenario and just the analog complexity that can emerge in that, if you were to compare some of it to more of an automated scenario, a great example is for example, a company that we've invested in is called Debify, and they are, we think, in this Goldilocks zone for how they've structured their product between this world of DeFi and between the centralized world of financial services that exist in the industry today. Taking out loans on a collateral position on Bitcoin has a perennial bid because, people want to avoid tax consequences and defer those into the future. And, there's a very large credit market that's already expanding on top of it. We think that for creating those loans, the more, market-based peer-to-peer that can be, a lot of the issues that emerge from hypothecation were because of centralized loan providers. And Debify is providing a platform for peer-to-peer loan matching, where you can use what is a smart contract technology within Bitcoin of multi-signatures. And you can take a simple technology like that, and you can, between the borrower, the lender, some sort of third-party intermediary, and then the platform itself, Debify, split that key up into, say, 4 keys. And then in some sort of, if a collateral call is conducted, it's collateralized loans on top of Bitcoin. If there is some sort of scenario like that, there is a dispute resolution process that it can go through. But it's leveraging the efficiencies of cryptography effectively. And that's what we think is interesting, is there is some efficiency to be gained in how we can automate some of the functionality through smart contracts. It doesn't mean that we're going to be solving everything. It doesn't mean that dispute resolution goes away. I think dispute resolution exists for the vast majority of the market. But the more standardized a contract is, and the less consequential economically the outcomes are, that is a better candidate for smart contracting technology today. And then to Korok's point, as we have really interesting AI that can provide dispute resolution and mediation type services over time, then that's a crazy new world that I don't think we understand the implications of yet.
Yeah. Well, I think with respect to having dispute resolution, I think you can have a decentralized dispute resolution like a digital private law system where you have oracles, and the oracles can be mutually agreed upon by contracting parties. So as opposed to having the government being the oracle, and that's what you have to opt into, is that you can opt out of that, and oracles can develop reputations, and all their reputation could be on chain, and actually oracles could issue their own oracle tokens, and so good oracles can make more money by being a good oracle, because people will want to use that oracle for resolving dispute because of the on-chain reputation that they have. So I think there's a lot of applications associated, and that I would not consider a shitcoin. That's like a human capital coin. So in the sense that your reputation is a public reputation because there's a chain, and the chain records your activities that you function as an oracle, and so it's verifiable, and then people can say, well, if we have a dispute, I want to get the best people to resolve that dispute, and the parties that agree to contract, they can choose, they can stipulate who the oracles are, to resolve those disputes. So I think there's a lot of things that can be resolved that we can basically convert this into like a complete private law system, and we could leave choice to the contracting parties, and people would not be able to lie about their reputations because all their reputations would be on chain. So
Yeah.
I think that could be done. I think also with respect to like the differences between, centralized finance and I don't want to use DeFi because a lot of these crypto DeFi platforms are not really DeFi. So but what we can see, and I wrote an article, co-authored one at least with Thomas Phillipson who also was at the chairman of Council of Economic Advisors during the Trump administration, and he was a chair of it actually about the last 2 years. Also another University of Chicago person. We wrote a paper, I think it was, I don't remember where it was published. Not a paper, an article. And basically what we pointed out, if you take a look at what happened during FTX, which I guess was one of the largest exchanges, there was no systemic shock associated with its bankruptcy. The same thing with Celsius. What happened after you had, I think Celsius might have been, quote, the largest, quote, DeFi platform, again, which is it's a CeFi, centralized finance, not decentralized finance. So, but I think it was the largest. And, and then what happened is when they had their problems and went into bankruptcy, and obviously the bankruptcy resolution was not through a smart contract. Okay, so the FTX bankruptcy also did not occur in the context of a smart contract. They couldn't get investors to say, put up capital, and if anything, and if shit happens, we're gonna have a smart contract to find what happens in the event of these bad things that happen. So all the people that had the relationships and put deposits in, they were not all governed by smart contracts. They chose not to do smart contracts, which is the irony of the shitcoin ecosystem, is that when it comes to getting money in and how they treat with shareholders and how they treat with stakeholders, they end up doing very little smart contracts, and they end up doing everything adjudicated within, the legacy legal system. So, but there was no systemic shock. Platforms like Aave benefited from Celsius's bankruptcy, and then after FTX, more people started custodying their own tokens rather than leaving them on exchanges. But was there a government bailout? I don't remember. I don't think there was a government bailout involved. So there was no bailout at all. Okay. The incidence of losses fell only on the people stupid enough to give SBF money, when he was apparently using QuickBooks or something, is what I read, where apparently he had no risk management system. And you had allegedly, genius money managers who charge high fees based upon the expectation that they're actually going to do diligent due diligence, which they clearly did not do, in investing in these platforms. So, but in spite of that, the incidence of loss was born on sophisticated investors who did inadequate due diligence, and so the market worked. They lost money because they were dumb, and there was no shock external. I mean, the lesson should have been that maybe we should have the financial system look more like this crypto ecosystem, and that we would not have systemic risk, and there'd be no bailouts, because these were the largest platforms, and the largest platforms went under, and the only people who suffered were the people who were stupid enough to use these platforms with doing inadequate due diligence, and they deserve the consequences of their own stupidity. So, the market worked, and people changed their behavior because they said, now I got a little bit smart. They got a little bit smarter. So, I have a couple of questions here that I want to get to, and then we can, go back to some of this. Some audience comment was Bitcoin is still a digital currency, and not many people talk about this, but it's very trackable. Bitcoin is not a privacy coin. Korok, Eric, who wants to address that comment?
Eric, you want to go for it?
Yeah, it's a pseudonymous type of transacting medium because of the way that information can spread so rapidly online today. There's a very high risk that pseudonymity is exposed on the network. So I certainly agree. I don't view Bitcoin as necessarily a privacy coin. I think that like the like cash or specie-based transaction market is one of the best forms of privacy that you could really have today. That's one of the trade-offs, right? As we created a digital form of money on a public ledger, the primary issue has been, well, how do we maintain privacy on it? But I don't view using the Bitcoin base layer network as the medium in which, consumers are going to be transacting with Bitcoin in the future. There's other protocols like the Lightning Network or federated Chaumian mints, or potentially other scaling solutions like zero-knowledge rollups. There's all these different technologies that are emerging right now. They can add significant privacy to the way that you transact, particularly Chaumian eCash and zero-knowledge rollups. I view the world in 10 years where average consumers are paying for their coffee in Bitcoin is using these privacy-based technologies. And that's great. Like I think that Chaumian eCash, for example, that was the very first form of digital currency we attempted to create. That was David Chaum. He's the father of the cypherpunk movement. And back in I think it was 1983, is when he started a company called DigiCash that was trying to have online merchants use eCash as a mint-based note effectively for transacting. And it tries to replicate the properties of a cash transaction just in the online digital world. And that's what's really interesting is that eCash is a technology that takes a lot of the benefits that cash has, and it has the benefits of being able to use it on the internet. And that could be a really interesting way in which consumers are paying for things. The way that these technologies exist today, there's a very large outstanding regulatory question, which is true for all these emerging technologies. Not all, but a significant proportion of the emerging technologies in this industry. But as it exists today, I mean, there's banking institutions or there's financial institutions in Europe that are currently looking to use this as an actual banking technology in the traditional system. So there's interesting technologies like that I'm not concerned about it over the long term. But it's like today, if you're sending a Bitcoin transaction, you need to be very careful about what information is associated with that address, and never tell people, who you are, how much Bitcoin you have, because there's people who are tracking these addresses online, and they might come to you in the real world if they find out how much Bitcoin you actually have.
Yeah, I'm a hodler, so I don't plan on transacting with Bitcoin anytime in the near future. So I think that for engaging in as a means of payment, I'm satisfied with using shitcoins as a means of payment, and for me, my Bitcoin is a store of value. So I don't, the speed concept. When people tell me, and one person commented that it's slow, I want to find out a store of value that you can convert into fiat quicker than Bitcoin. Is there a store of value out there? Can you sell your car? Can you sell your house? Can you sell your painting? Can you sell your stocks, bonds? Think about all the assets that are stores of value, and which one can actually be converted into fiat quicker than Bitcoin. And how many of those are you going to have to pay a significant amount to a third party in order to convert it? So it's not only that is it quicker, it's so much cheaper to convert it as if you look at it as a store of value. I think there's a lot of confusion amongst people, about the conversation about depending upon, the utility of what you see in the Bitcoin or any token, or any asset or currency. The question is what is its utility to you? So if you see the utility as Bitcoin competing with fiat, as a form of payment, I had this conversation with Eric the first time we had a conversation. I said, let's take a look at the legacy financial system versus trying to create, a Bitcoin bank. Okay, if I put my Bitcoin into a Bitcoin bank, when we know the issue of Caitlin Long has had a hard time getting approval for her narrow bank. Is the fact is I'm competing with a subsidized ecosystem. So where deposit insurance exists, that might be the most subsidized ecosystem, in the United States are financial institutions. So the question is how do you compete with a parallel system that has no subsidies in it whatsoever, as opposed to ones where risk averse individuals are going to have to say, and where am I going to put my money where I know I don't have to care about that third party because I got the government backing it up, and if shit happens, I know the government is going to step in, and I know no matter how bad things are, I'm going to get paid my money, and I'm going to get paid it reasonably quickly. So, as opposed to the experience people have had trying to get their money out of FTX and Celsius. So, so I just, and I also think it's a delusional to think that if people start moving and using using something as a form of payment other than what the U.S. government defines as legal tender, which is the U.S. dollar, that if that starts losing market share, the government is going to figure out ways to regulate the other intermediaries in the other ecosystem. So whatever attributes they can promote today, they won't be able to preserve those attributes because the government will destroy them unless they continue to become part of the surveillance state, and I just think that's the reality. So ultimately, for me, the prospects of Bitcoin being useful for a form of payment, I'm skeptical about that utility for Bitcoin for a long period of time. And I know a lot of people disagree with my position. I don't give a shit. So
Jeff, I guess to me,
I'm sure I've made a lot more money accumulating Bitcoin than the people who have spent Bitcoin. So, and then we have Gresham's law that tells us that bad money forces good money out of circulation, and there's a proliferation of shitty money out there. So for me, I'm either trying to spend my shitty money or converting it into Bitcoin, but I'm certainly not selling my Bitcoin to hold on to more shitty money. So, so for me, those utilities are things like that. People can worry about that when Bitcoin's at 500,000 and $1 million, and then sit back and say, "Oh, gee, it's slow." But meanwhile, while gold has gone from 2,500 to 2,900, and Bitcoin has gone from 60,000 to $1 million, so I'll have to wait 20 minutes to convert it into an alternative, form of money that I can be spent. It's still the fastest that can be converted of any store value. No store value can be converted as cheaply and as quickly as Bitcoin. So that's why I always try and separate out the utility of it as a store of value versus its utility as a form of payment, because I would not argue that Bitcoin is a great utility for a form of payment.
So Jeff, I guess I see these as different stages in the life cycle of money, and in our lifetimes we're living in the store of value era of Bitcoin, and that is complete. I mean, if all Bitcoin did was win the store of value argument, that would itself be a fantastic outcome for the world economy. To me, I see no problem with innovation on medium of exchange, even if it may not happen for 100 years. I'm pro innovation and pro experimentation, and so the second and third layers on top of Bitcoin that over time will develop, I think, are great for Bitcoin, and it probably helps. The fact that innovation is happening now, I think, makes it a better case for Bitcoin today, even for a store of value, because that down the line there will be the future of a medium of exchange and unit of account, even if we don't have that today.
Yeah, From like my firm's perspective, it's the same perspective. We view, relevant investments around Bitcoin infrastructure are things that are supporting Bitcoin's function as a store of value today. What I think there's a bit of gray area on that is very valuable is using Bitcoin as a form of collateral settlement. That's very valuable today as opposed to incumbent financial infrastructure. Remittance payment market is a great example of how that works. Using Bitcoin in lending markets as collateral is another great example of how that works. You really can't find a more efficient form of collateral. And there is a bit of a medium exchange type component to that, but it's still a store of value type function is kind of how we view it. I'm a little bit more optimistic on when we get to medium exchange. I'm thinking we can get there in a couple decades. I think it's possible. If there's one thing I've been surprised about when I've gotten involved in this industry, is everything's happened much more quickly than I would have expected. It wasn't that long ago that I was getting excited because the Winklevoss twins were on CNBC, and I thought that was great marketing. And here we are with multiple presidential candidates that are running on a platform that's pro-Bitcoin. And I never would have expected that to happen this year. And I think that these bottom-up incentives that exist for Bitcoin adoption is aligning with the political environment in a way I wouldn't have guessed. And there's a lot more, state level politicians or, people in the House that are starting to support this technology in a way I wouldn't have guessed. So I don't know how rapid that snowball effect is really going to be. But if we think come next cycle, after the amount of progress we've made this cycle, it could be a very different world from a regulatory standpoint. And certain technologies might be getting support that we wouldn't have guessed because it's politically aligned.
Yeah.
I don't think about being politically aligned. I don't want to be.
Fair enough. Yeah.
So I want to. Justice Lewis Brent that the most valued right of any human being is the right to be left alone. So so that's the right that I cherish, is the right to be left alone. I just want the government to leave me the fuck alone. I want to leave the government alone. I want them to leave me the fuck alone. So that's the right I cherish more than any other right. And I wish the government had the same respect, for me, and a fundamental right that one of the greatest justices of the Supreme Court, said was a cherished right. What do you think needs to be done to even broaden adoption? Like I'm personally not a big fan of the ETFs or the Michael Saylor of the worlds. I think they're good pitchmen for the utility of Bitcoin as a financial asset, but I don't think they're good pitch people for the utility of the principles embedded in Bitcoin. And for me, the principles embedded in Bitcoin, are as important to me as far as a utility perspective as a statement as a financial asset. So I guess to some extent, they have been successful bringing more people into Bitcoin because people like the ease of having a third party custody it, but then that way they enter the surveillance state. So again, that's only promoting one aspect, one attribute of Bitcoin. What do you see, each one of you, your opinion on the path to significantly greater adoption of
I think we need more on-ramps in the markets all around the world. I think the more liquidity that's supporting on-ramping into Bitcoin from the fiat system, moving it in, I think that is very valuable.
So how do you define an on-ramp, a more on-ramps?
Like an exchange, any sort of exchange type service that would swap any form of asset for Bitcoin. The more that exists through different business models, the better.
Yeah, unfortunately, once the exchanges are then the ones that are deputized by the government to provide surveillance, and that's basically, there's no point in Bitcoin being pseudonymous with once you're doing through exchanges, because as soon as you deal with exchange, your identity is going to be revealed, and all your activity will be tracked. So I guess if that's what the price, and again, that's the price people pay for wanting it to see Bitcoin as a form of payment. So it's not a utility if you want to see Bitcoin as a store of value, but it is a utility if you want to see Bitcoin, as a form of payment. And to me, that's the problem. The problem is that these exchanges are so centralized. I think every exchange is controlled by the CIA or the FBI or whatever, because I think these exchanges probably produce a lot of information that's useful to the government, and these exchanges are happy, to cooperate with the government and violate the third party doctrine by sharing information that the government normally, if they want to get it from us, would have to get a search warrant, or, to get it. Korok, what about you?
Yeah, so I'll say something kind of conventional, something a little unconventional. On the conventional side is I still think that Bitcoin has value as the world's scarcest asset, and that adoption can and should kind of happen on its own. More education is always better. More talking about Bitcoin's principles and its and sound money and all of the ideas we've been talking about today, I think is all helpful. The unconventional thing I'll say is I do believe the Bitcoin community needs to get its hands a little bit dirtier inside of kind of the tech landscape today, and that Bitcoin should make a more proactive move to win on technology, not just on economics. The stuff that I'm seeing right now, I'm in the Bay Area, and I'm seeing all the kind of front row seats to AI, and really the debate here is not between like altcoins versus Bitcoin. Right. That's what I think the Bitcoiners and the Bitcoin community focuses on exclusively. It's really about these large language models and how they're going to be embedded inside artificial agents and how these agents are going to be communicating with each other. And right now, the dominant idea is that let's use stable coins as the medium of exchange. There are startups and platforms that are doing that. I think Bitcoin needs to get in there, and we need to fund startups and create companies that put Bitcoin front and center on this revolution. And that is a decision I think the community has to make. I mean, we can either sit back and be passive about this, or we can kind of dive in and say, no, we believe Bitcoin's the best money, both store of value and medium of exchange. We want it to be the first order layer. We need a protocol layer for machines. I mean, Lightning is great, eCash is great, but let's think about what do the artificial agents need, and let's think through a Bitcoin lens for that.
Completely agree.
Well, do you think that the Bitcoin community should be engaging with those actually trying to build, decentralized AGI platforms as opposed to the extremely centralized AGI platforms? Should a decentralized money be used as an instrument, as a tool, as an input into the production function of maybe the most centralized ecosystem ever designed by mankind?
Yeah, I mean, look, the venture ecosystem is not perfect, nor is the legacy financial system. But I guess I believe in the Trojan horse approach, that because Bitcoin fundamentally has the most value, both intellectually as well as technologically, we do need to play in these spaces. And I think I have confidence that Bitcoin will win because the technology, in my opinion, is superior in ways that even the rest of mainstream Silicon Valley doesn't quite understand. So I do think there's an opportunity there, and we should chase after it.
Yeah, I guess I'm probably more of a, I don't know if purist is the right word, versus I'm not as pragmatic, I guess, as either one of you, Eric, or I'm a free speech absolutist with whatever the consequences are.
Right.
I think the problem is not, a world between whether we choose Trump or Kamala, we choose Democrats or Republicans, whether we choose, MAGA or progressives. I think it's a choice between, do we choose decentralization over centralization, and I never want to aid and abet any sort of centralized system. I think the only check we have against avoiding being indentured servants, to have us being under constant surveillance and being us having so much surveillance that our behavior is controlled by incentives from those that manage these systems. I mean, did you see the comment that Larry Ellison made the other day?
No, I do not know.
Larry Ellison made a comment that said, the future looks great to me. We're going to have all this technology, so we'll be able to so privacy will be so eroded that people will behave so much better because of the fact that they'll basically be under surveillance all the time. So being under surveillance all the time, will make sure that people, and who will be the people who will be disciplining them are people like Larry Ellison, who control the AI, and they'll figure out how to reward us for behaving according to the way they think we should behave, and punishing us if we don't behave the way they think. So we'll have their vision of the world is Skynet. So the science fiction writers warn us with some vision, clarity of vision of the consequences of where we're going with the technology we're embracing and how dehumanizing it is. So I'm pro-human. So with all our flaws, with all our liabilities, with all our horrible attributes to it, I'll still take the human being over the choice of dehumanizing us and us having a master programmer, who will program our reality for us, because we don't do a very good job doing it ourselves. So, so to me, that's more, I think selling that philosophy is more important to me than seeing people implement more of the technology, that both of you, have talked about. But that's what makes the world go round, is nobody has to have the same opinion. And that's what makes life interesting, is people having, different points of view. And at least we can have a conversation expressing our different point of view without engaging in insults or disrespectful behavior, towards each other. And so I think that's what this platform represents. That's what really free speech should represent, is basically reasoned discourse amongst people who can agreeably, disagree and still maintain a level of mutual respect. And I respect every entrepreneur who's trying to do something that they have passion about, that they believe in, and that they think is really going to try and make a positive impact, on themselves and on other people, and and are driven by good, decent, honest motivation. So and ultimately, who will decide is the marketplace, and that's where the decisions should be made by the marketplace, not by the government. It should be the act of voluntary exchange as opposed to coercive exchange. So, Eric, how can I'd like each one of you to put. I don't want to have the last word. I want to give each one of you the last word. So why don't Eric, first you go first, and Korok, then you go with your last word, and then also conclude how people can learn more about you, your activities, your thoughts, and how they can engage with you. And Korok, you should do the same after Eric goes. So, Eric, go ahead.
Yeah, I mean, my last word is I think that we're witnessing the emergence of a new monetary good, and this is just something that hasn't happened in millennia. I think Bitcoin's the most revolutionary technology of our lifetimes, and it's going to have freedom-enabling aspects and growth within society that we can't really comprehend yet. That's what maybe bet my career on this whole industry. And if you want to learn more, I have actually a free PDF of my book that I recently released on my firm's website. So you can go check it out there if you enjoy the book. Please support me. Get one on Amazon. You can find the reviews on it there. But my firm's website is epochvc.io, epochvc.io. I have some of my other technical writing around the industry listed there as well.
Thank you, Eric. Korok?
Yeah, I agree with Eric. Bitcoin to me is the greatest idea of our time. It really is fundamental. I'm still committed to educating people about Bitcoin, and everything we discussed is fascinating in this conversation today. For me, what I'm working on most aggressively is trying to understand this interaction between Bitcoin and AI. And so I'm spending almost all my time learning as much as I can about AI and figuring out how Bitcoin can participate in this. in the future. If you want to stay in touch on that, go to my website, principlesofbitcoin.com. You can sign up for my newsletter there. I'll have some coursework about my classes, and then I will over time try to bring together these two worlds in a way that's productive.
Well, thank you so much. And I'm going to just make one final comment, that one where at least we've reached a consensus and broad agreement in, is that we each agree that Bitcoin is the most important innovation and technology in our lifetimes. And I've had a little longer lifetime than either of the two of you.
That's right.
So thank you so much. I really enjoyed your contribution, and I appreciate the time you gave to participate in this podcast. Thank you
Likewise,
so much.
Jeff.
Thank you, Jeff. Thank you very much for hosting us, and great to see you both.
Likewise.
Bye. Bye.